Hello friends, welcome to today's session. I am CA Renu Srikanth Tantry here, and the topic for today's session is drawings, the types of drawings and the interest on drawings. Now to start with, first let us understand the term what is drawings. Now we are talking from the perspective of a partnership. So there are partners who might be withdrawing something from the business for personal use. So those withdrawals for personal use are called as drawings. And these withdrawals can be of two types. One, it can be cash, which is withdrawn for personal use, or the withdrawals can also be in kind, means in the form of goods which are being dealt by with the business. That might also be withdrawn by the partner for his personal use. So, for example, if the partnership is dealing with some electronic good and one of the partner withdraws one of the electronic good and takes it home for his personal use, then that also is drawings. So this is what drawings mean from the partnership point of view. Now let us go into understanding the types of drawings. The partner's drawing can be of two types. First one is the drawings against capital, and the other one is the drawings against profits. Now we need to understand this difference so that we understand on what type of drawing interest on drawings would be charged. So let us understand first what is drawings against capital. When we're talking about drawings against capital, it means amount is withdrawn by the partner from the capital. So here there is actually, it reduces the capital of the partner. From the capital, the partner is withdrawing some amount, that is drawings against capital. So it will go to reduce the capital, and therefore where would be debited? It would be debited to the capital account of the partner, and this amount whichever is being withdrawn, on that it would have an effect on the calculation of interest on capital. Now, partners are entitled to interest on the capital they have invested in the business. And therefore, when interest on capital is being calculated, it will be calculated on the opening capital. Further, if there are additions or withdrawals, then accordingly you will have to modify the capital. And on the enhanced or the reduced capital, we will be calculating the interest on capital. And therefore, when the drawings is against the capital, it would go to reduce the capital. And therefore, the amount of capital on which interest would be calculated when it is interest on capital would be on the reduced amount of capital. Therefore, interest on capital computation would be affected by these type of drawings. Now we go to understand the drawings against profit. Now, what do you mean by drawings against profit? Now, these drawings are done against expected profits. We know that the financial statements are prepared after the end of the year to find out the profit or loss, and that profit or loss would be distributed amongst a partner in the profit sharing ratio. Therefore, whatever is the expected profit, if the amount is being withdrawn against that expected profit, then we call that drawing as drawings against profit. This does not reduce the capital because it is not being withdrawn out of the capital, but whatever is expected profit that is expected to be credited into the capital of partner, against that the partner is withdrawing the amount for his personal use. And where does this particular type of drawing against profit go? It is debited to an account, separate account called as drawings account. So it is debited to drawings account. Now this type of drawings, that is the drawings against profit, on that interest on drawings would be charged. So the firm will be charging interest on drawings, on these drawings which are made by the partner, and therefore it is going to be received by the firm and paid by the partner. This is not going to affect the interest on capital computation. It is this type of drawing affects the interest on drawings computation, not interest on capital computation. So these are the two types of drawing. We need to understand the distinction, because when they give you question for calculation of interest on drawings, you have to first see whether it is drawings against capital or drawings against profit. And only on the drawings against profit you are supposed to calculate interest on drawings. If it is given that partners withdrew amount out of capital so much, or the drawings out of capital was rupees X, then you should not calculate interest on drawings on that particular amount withdrawn, because it has been withdrawn out of the capital. So these are the two types of drawings. Now, once having understood this, now let us go and understand the journal entry that would be passed to record this interest on drawings. First, when the interest on drawings is charged, there will be first entry passed where partner's capital or current account would be debited and the interest on drawings account would be credited. Now, interest on drawings is being received by the firm and therefore it is credited to interest on drawing, whereas it is being received from the partner. Anything that is being received from the partner will be taken out from their capital or current account. Now, the capital or current account, why we are using this term? Or because if they are following fixed capital method, then the interest on drawings would be passed through the current account. And if the firm is following fluctuating capital system, then the interest on drawings would go through their capital account. That is why on the basis of the capital account system, we would be using the term capital or current account here. And because it is being taken out from the partner's capital or current account, it is being debited. So this is the entry we pass when interest on drawings is charged by the firm. And after having passed this entry, we are supposed to close out this interest on drawings account. And therefore, we pass one more entry, that is interest on drawings account debit to profit and loss appropriation account. This interest on drawings is a part of the appropriation account. It does not go into the profit and loss account. It is a part of appropriation account and therefore it is transferred into the appropriation account. So this would appear, interest on drawings would appear on the credit side of the profit and loss appropriation account. So therefore, we know that we are required to pass two journal entries related to interest on drawing. So hope that is clear. Now let us take one example and pass journal entry related to interest on drawings and understand it. The example here is Amit and Sumit are partners in a firm sharing profits and losses equally. Amit has withdrawn a fixed amount as drawings and interest due thereon was rupees 1000. So here in this question, interest on drawings which is charged by the firm from Amit has been given as 1000 rupees. They have said pass journal entries related to interest on drawings. So let us pass the journal entries. First entry would be for the interest on drawings charged by the firm. So we'll write the date which is 2021. Suppose we take it as 2021 March 31st. As the date has not been given, you need not write the date. But here, suppose assuming that the year end was 31st March, then I am writing the date here, 2021 March 31st. So first entry would be to charge interest on drawing. So we would debit Amit's capital or current account. Here we don't know which method has been followed as the information is not clear. So we are using this. If it was clear, we could have opted for the correct term. So Amit's capital or current account debit. 2. Interest on drawings account. So this would be the journal entry which is passed for 1000 rupees. So we write the narration being interest on drawings charged. Now, after passing this, again one more entry to close out that interest on drawings account, which will be transferred to the profit and loss appropriation account. So here it was credited, so we debited. So interest on drawings account debit 1000 to profit and loss appropriation account 1000, being interest on drawings transferred. These are the two journal entries that we are required to pass. So I hope that is clear how we pass the journal entries related to interest on drawings. Now moving further, how do we calculate? In this example that we just used for the purpose of passing the journal entry, interest on drawings is directly given. But we would be required to calculate interest on drawings where the amount of drawing, the date of drawing and the rate of interest on drawing is given. Then we need to know how to calculate that interest on drawing. So to understand how to calculate interest on drawing, first we need to understand that drawings can be of two types. One, irregular drawing, the other one is called as regular drawing. So from the term only we understand first what is the amount? The amount of drawing, that is the amount which is withdrawn for personal use. It might be regular amount, say 2000 per month, 5000 per month, or it might be irregular amount. Like in 1 month he withdraws 2000, next month he withdraws 4000 and 4 months later he might withdraw 6000. So the amount might be irregular. And whereas regular drawing, the amount which is withdrawn is regular amount, which means every month or every quarter same amount is withdrawn, say 4000 per month or 4000 per quarter is withdrawn. So there the amount of withdrawals is regular or same. Then we have to talk about the interval of drawing. So irregular, so therefore the interval is also irregular. Means as I told you, it might be withdrawn in the month of April, then July, then December, then March. So there is no regularity that every month or every quarter it is going to be withdrawn. That is irregular drawing. But regular drawing, it is regularly withdrawn, which means either at the beginning of each month or it can be at the end of each month, or it can be like every 1st of April, May, June amount is withdrawn, or as on 30th April, 31st May, like that every 30th at the end of the month it is withdrawn. And that type of drawing is called as regular drawing. Now you might wonder why we are doing this. First, let us understand with the example. Like for example, on 1st April 2020, there is a withdrawal of 4000. Then directly on 31st July 2020, there is a withdrawal of 10,000. Then on 1st Jan 2021, there is a withdrawal of 2000. And then on 31st March 2021, there is a withdrawal of 5,000. So this is an example of irregular drawing. Here the amount are also irregular and the interval is also not regular. It is just randomly withdrawn whenever required partner has withdrawn. Whereas an example for regular drawing could be like on 1st April 2020, then 1st May 2020, then on 1st June 2020, every month, say rupees 3,000 per month is withdrawn, like that every month till 31st March of 2021, every month 3,000 is withdrawn. That is beginning of each month. End of each month means 30th of April, 31st of May, 30th of June, like that goes on till the 31st March. It is withdrawn. So that is end of each month. Suppose 4,000 per month is withdrawn. Then that is called as regular drawing. Now, why do we need this distinction of regular and irregular drawing is the method that we use to calculate interest in drawing is different under these two types of drawing. Under the irregular drawings, we would be using either simple method or the product method for calculation of interest on drawing because the amounts might be irregular or the interval is irregular. But when it is regular drawing, we use what is called as average period method. So we will be learning about these two methods in detail in my next videos. If you found this video useful and would like to get further videos on this topic, please do like, share and subscribe to my channel. And yes, don't forget to hit the bell button to get notifications of my upcoming videos. Thank you. Have a great day.